at the beginning of the year that the Fed would continue to raise interest rates most of this year, and in 2024, they will be lowering them. They're not only going to lower them, so is the ECB. They're going to again artificially prop up the economy because it's going down. Oil prices, did you see they took a big hit today? They're down for almost $5. The thing's really booming. But again, all things are connected. And if the Gaza war the Israel war, I should say, keeps expanding, we're going to be in trouble because you're going to see oil prices go to $130 plus a barrel if Iran gets involved in this. Iran says they're not going to, by the way.
In today's show, Gerald Celente and Lynette Zang discuss the financial landscape as recent market dynamics displayed a mix of resilience and vulnerability. While the Dow experienced slight declines, overall market sentiment remained positive. However, this optimism was offset by Walmart's stock, which plummeted by 8% following a lower-than-expected annual forecast. The economy faced additional headwinds as October's producer price index registered a notable 0.5% decline, the most significant monthly drop since April 2020. Looking ahead, there are indications that both the Federal Reserve, Fed, and the European Central Bank, ECB, are contemplating a pause in their policies, with a forecast suggesting potential interest rate reductions in 2024 to artificially bolster the economy. This financial backdrop unfolds against the backdrop of global economic concerns, including dwindling industrial production, escalating layoffs, and economic contractions in countries like Peru and Japan. Simultaneously, a separate narrative emerges pointing to a nuanced perspective on inflation at 3.2%. The speaker underscores that this seemingly positive figure signifies a gradual increase in prices, not universally applicable. Drawing parallels with historical instances, such as the devaluation of Venezuelan bolivars and large denomination bills, the speaker expresses apprehension about diminishing purchasing power. Citing examples from Zimbabwe's hyperinflation, there's a cautionary tone regarding a potential shift toward larger denominations, emphasizing the urgency for awareness and proactive measures in response to these inflationary trends. Like subscribe and turn on the notifications bell to get more videos like this, and check our pinned comment for some massive sign-up bonuses if you want to add crypto to your portfolio.
Well, we have some good news. Inflation is only running now at 3.2% overall. Well, is that really great news? Because that just means that prices are going up a little bit slower, and that's not true with all prices. That's only true with some prices. And let me remind you of something, okay? This is a 2013 Venezuelan bolivar. How many bolivars? 20. And you could actually convert that into some things. I mean, Venezuela's been in trouble for a while, but you could actually buy something with it. Well, that's not any money anymore because the government says, nope, no money. Now, this is a $500 million bolivar, and you still can't buy anything with it. Do you remember back in the day when you had a silver certificate, and that silver certificate, you could convert into this silver dollar? This was used in one place. This was used all across the globe. Oh, how about this gold certificate? What does this say? $10 in gold coin payable to the bearer on demand. And then this gold was used everywhere in the world, not just one little place. We all know that this stuff does not buy you what it once did, but this is now our largest bill. You know, there used to be a $100,000 bill, and out in the public for you and me, there were $10,000, $5,000, $1,000, and $500 bills. So all of this is indicative because what are we going to get soon? $1 trillion? Like what, Zimbabwe? Yeah, Zimbabwe. $10 trillion note, and you can't buy anything with it. We are at the end of this cycle. And there is, and I'm getting chills, because when I was putting this together, I saw an extremely key and significant pattern shift that I'm going to show you today coming up.
Now, Gerald Celente shares his views on the market, unemployment, and how his forecasts are panning out.
That we've been doing it. We put the amount of layoffs going around the world. I'm mentioning all this because the equity markets are going up. Oh, but oil prices are going down. Danish economy slips into recession. Germany's GDP contracted 0.1%. They're in recession. Japan's economy sank at the fastest annualized quarterly pace in 2 years. Peru. We can keep going on here. So why the equity markets going up? And again, go back to they're going to be lowering interest rates. Germany's unemployment rate climbed by 0.8%, the highest level since 2017. Now, this is important, and we've been forecasting this and putting it in the Trends Journal week after week. And to subscribe to the Trends Journal, you go to trendsjournal.com, Trends Journal, and people that can't afford it, it's $2.86 a week. So take it easy. I mean, if you're really in that desperate shape, I understand, but we're giving you what nobody else is. You know the forecasts. We said the markets would go up when we said they would go up. They went down when we said they would go down. And we keep on going. Danish shipping giant Maersk this month said it would cut about 10,000 jobs, which we reported in the Trends Journal. You ready? Amid a nearly 95% year-over-year decline in profit. 95%. This is one of the biggest shipping giants in the world. That tells you what trade is doing.
Now Zang talks about inflation and how the dollar is losing its value by the day.
Physical gold and silver dealer, but what we really specialize, look, I have been in these markets on some level since I was 10 years old, and I'm 69, so 59 years. I've lived through a lot, but I've studied even more. And as a stockbroker in 87, I started to learn about currencies, and I saw these repeatable patterns, and I realized, and you guys all know this, there are patterns for everything's life cycle. I am not at the same point in my life cycle as my 8-year-old granddaughter, nor would you even think that I was. And she's not at the same point in her life cycle that I am. And you would never think that she was. So why would currencies, and especially government-based currencies, why would that be true? That it doesn't change. It does change. They just try and do it slowly enough that you don't notice it. And that's their inflation target, is to keep it low enough that you don't demand more money. And oh my goodness, what has happened? But inflation was so obvious to everybody that employees started asking for more money. And the unions have now come to become a lot more prominent. And what they don't realize yet is that all of these wage increases still don't keep pace with inflation. Still don't. But we got to talk about what's going on, and we got to talk about this pattern shift that I saw.
Let's get back to Gerald Celente discussing his insights and experiences with the markets.
At the beginning of the year, that the Fed would continue to raise interest rates most of this year, and in 2024, they will be lowering them. They're not only going to lower them, so is the ECB. They're going to again artificially prop up the economy because it's going down. Oil prices, did you see they took a big hit today? They're down for almost $5. Brent crude and West Texas. West Texas was down almost $4. And Brent crude down almost $5. And why? U.S. industrial production fell by 0.6%. So what the consumers are spending is very different than industrial production. And industrial production is going down across the planet. And what else do we have? Inventories rose by 3.6 million barrels in the U.S. China's crude refining slowed 2.8% in October. And Organization of Petroleum Exporting Countries, on the other hand, has blamed speculation for the recent drop in prices, dismissing negative sentiments as exaggerated. Are they exaggerated? Are things really booming? But again, all things are connected. And if the Gaza war the Israel war, I should say, keeps expanding, we're going to be in trouble, because you're going to see oil prices go to $130 plus a barrel if Iran gets involved in this. Iran says they're not going to, by the way.
Inflation in the United States has shown signs of moderation, with the Consumer Price Index, CPI, rising by 3.2% for the 12 months ending in October, marking the lowest annual rate since March 2021. This positive development, down from 3.7% in September, sparked a surge in U.S. stocks, with the Dow racing over 500 points, the S&P 500 gaining 2%, and the Nasdaq Composite adding 2.3%. On a monthly basis, prices remained unchanged for the first time since July 2022, defying economists' expectations of a 0.1% increase. Energy prices dropped significantly in October, but rising shelter costs offset these declines. While Chipotle and other businesses have increased prices, the overall annual food inflation dropped to 3.3%, the lowest since June 2021. Core CPI, excluding volatile food and energy categories, increased by 0.2% monthly, resulting in an annual increase of 4%, the lowest since September 2021. Despite this progress, experts caution that inflation remains too high, complicating the Federal Reserve's efforts to implement monetary tightening and rate hikes. Richmond. Federal Reserve President Thomas Barkin believes more measures are needed to curb demand and inflation, emphasizing that the road ahead is not yet clear. Americans are grappling with the ongoing challenges of high inflation and interest rates, contributing to record credit card debt and increasing delinquencies. The October CPI report hints at a potential slowdown in discretionary spending, offering hope that demand-side drivers of inflation may align with households approaching their spending limits.